Amid escalating geopolitical tensions and shifting global power dynamics, the world is witnessing the unfolding of a new challenge, leaving one to ponder the intricate ties that bind us together, the threads that stage modern conflict. Europe became the backdrop of the relentless struggle between Russia and Ukraine, raging on, leaving in its wake death and destruction. Simultaneously, across the Pacific, the once warm relations between the United States and China have grown chillingly frigid, raising the specter of a second Cold War. Just as resourceful entrepreneurs thrived during the California gold rush in the 1800s, America's salvation may lie in strategic investments within burgeoning technologies such as AI, providing tools to prospectors. As these powerhouses vie for control and dominance, one must reflect on the very essence of an eroding empire, America. Hello, and welcome to another video of Finance Sense, where we cover all the latest trends in the financial markets and the economy. Before we start, make sure to leave a like, subscribe, and comment below if you enjoyed watching this video, and turn on the notification bell to keep posted. And now, without further ado, let's start. The onset of a new Cold War is evident, with a conflict unfolding in Europe. The ongoing struggle between Russia and Ukraine continues unabated, spanning 500 days since the initial incursion of Russian forces into Ukrainian territory. The toll has been significant, as more than 17 million individuals have been displaced, and an estimated $411 billion worth of destruction to property has been inflicted. Prospects for resolution remain distant. Since the commencement of the conflict, global markets have experienced tumultuous fluctuations, with prices of essential resources such as coal, wheat, gasoline, oil, and corn experiencing rapid increases. Consequently, the cost of living worldwide has surged, and this phenomenon is exacerbated by the dwindling savings resulting from the financial strains of the COVID-19 pandemic. Regrettably, the situation shows no signs of improvement. In the Pacific region, the atmosphere surrounding the interactions between the United States and China has grown distinctly frosty as we embark on a second Cold War era. The Chinese Communist Party has established dominance in the Eastern Sphere, while the United States maintains its position as the predominant power in the Western Sphere. The rapport between these two nations has been marked by turbulence for a significant time, and the prospects for any meaningful collaboration appear to crumble in the future. Notably, China, in conjunction with the BRICS coalition consisting of Brazil, Russia, India, China, and South Africa, is actively exploring ways to deviate from using the dollar as a primary currency. Instead, they aim to establish their own shared and unregulated currency. This currency's value would be linked to the extensive reserves of commodities under the control of the BRICS nations, comprising approximately 1/3 of the world's resources. Meanwhile, the situation concerning Taiwan and China reached an unprecedented level of tension after Pelosi's visit, which aimed to stress Taiwan's achievement in transforming its nation into a more democratic entity. During this visit, discussions also transpired regarding the augmentation of ties between Taiwan and the United States. As anticipated, this move provoked a strong and hostile reaction from China. Prominent figures within the Chinese government, such as Wang Yi, the foreign minister, expressed vehement opposition, characterizing U.S. politicians' actions as recklessly provocative. Wang Yi emphasized the perilous and unwise nature of the visit. This stance was then reinforced in the official media channels of the state, which disseminated calls for the interception of any U.S. military aircraft venturing into Taiwanese airspace, effectively issuing a suggestion that could lead to a global conflict akin to a Third World War. The current state of affairs is intricately linked to China's aspirations outlined in its 2049 agenda for national revitalization. This strategic narrative encompasses the revival of China's economic prosperity, domestic strength, and global influence. The year 2049 bears significance as it commemorates the centennial anniversary of the founding of the People's Republic of China. China's goals are identified as shared ambitions among all members of the Chinese populace, reflecting a nationwide desire to achieve the renaissance of the Chinese nation. Xi Jinping has consistently employed patriotic rhetoric regarding Taiwan over a prolonged period, evidently attempting to establish a justification for any potential future confrontation with his citizenry. Although Xi Jinping portrays China's actions as altruistic and aimed at global benefit, the reality presents a contrasting narrative. This is particularly evident given the challenges China currently faces in its pursuit to surpass the United States as the world's largest economy. These challenges encompass sluggish consumer expenditure, a turbulent real estate market, diminishing demand for exports, an alarming 21% youth unemployment rate, and a daunting debt accumulation at the local government level. On the other hand, Taiwan has emerged as a prominent player in the semiconductor manufacturing domain, asserting its dominance in the global markets. Remarkably, it commands a staggering 60% share of the worldwide semiconductor industry, a sector anticipated to turn into a trillion-dollar industry by 2030. The semiconductor industry's significance cannot be overstated. It forms the bedrock of countless electronic devices we engage with daily, underpinning the advancement of cutting-edge technologies like artificial intelligence. In this domain, Taiwanese microchip facilities supply a remarkable 93% of advanced semiconductors, solidifying Taiwan's indispensable role in shaping present and future innovations. Undoubtedly, the underlying motive driving China's unwavering pursuit of control over Taiwan is the island's consequential influence on the worldwide economy. The impact is of such magnitude that it has the potential to sway the equilibrium of power, thereby affording China the means to realize its aspiration for national revitalization and, conceivably, even attain global dominance. In the contemporary context, discussions predominantly revolve around artificial intelligence, and this focus is indeed well-founded, given the boundless prospects it offers for exponential progress. Such advancements could revolutionize the landscape of investment, leading to substantial disruptions. During the 1850s, a surge of domestic and international migration swept through California, prompted by the discovery of gold near Sutter's Mill. This revelation drew a staggering influx of around 300,000 individuals to the region, all motivated by the prospect of unearthing their fortunes through gold mining. Nonetheless, the individuals who reaped the most significant profits were not those who were directly engaged in mining, but rather those who cleverly catered to the needs of the prospectors by supplying the essential tools and equipment, such as shovels and wheelbarrows, required for this endeavor. This group of people grasped the demand for such equipment, which generated substantially higher returns compared to the mining itself. The mining activity faced fierce competition and offered limited chances of striking substantial gold deposits. The underlying lesson from this narrative is that, at times, it can prove more lucrative to supply essential components to those entering a thriving sector rather than directly engaging in that industry yourself. In certain instances, the wiser course of action is to forego seeking the riches directly and instead focus on providing the tools needed for others to do so. This principle finds heightened relevance in numerous contemporary investment prospects. A pertinent illustration can be drawn from cryptocurrency and Web3 technology. Some cryptocurrency investors have attained substantial wealth within this realm, but a majority have suffered considerable losses, often on a significant scale. Conversely, those who have emerged as winners are the individuals or entities that facilitated the process rather than engaging in the speculative endeavors themselves. This analogy aligns with the behavior of reliable and legitimate cryptocurrency exchanges. Prominent names such as Binance, Kraken, and Coinbase, which have attained monumental success by effectively providing the tools necessary for those venturing into the cryptocurrency field. As stated by former executives at Binance, the privately held company currently controls an impressive $300 billion valuation. Kraken, gauged among the pioneer cryptocurrency exchanges, has an estimated value of around $10 million. In contrast, Coinbase, which transitioned into a publicly traded entity following its 2021 initial public offering, offering, boasts a present valuation of $16.7 billion. Currently, the spotlight has shifted away from cryptocurrencies, and a new focal point has emerged in the form of AI, the contemporary equivalent of gold. The symbolic miners in this context are the major technology companies' generative AI systems, such as ChatGPT. This technology has catalyzed substantial interest in the AI sector. OpenAI, the entity responsible for developing ChatGPT, intends to pursue an initial public offering that would ascribe a value of $29 billion to the company. Prominent venture capital firms, the Founders Fund and Thrive Capital, are engaging with OpenAI to acquire shares amounting to at least $300 million. This sum significantly surpasses the offer made in 2021, which valued OpenAI at $14 billion. If AI represents the modern-day equivalent of gold and numerous tech companies are capitalizing on AI for profits, what should our approach be? The solution lies in profiting from these AI-focused companies, much like NVIDIA's successful strategy. NVIDIA, a technology corporation renowned for crafting a diverse range of computer chips, has achieved remarkable success by marketing these chips. Being a chip manufacturer in 2023 has proven to be an incredibly lucrative venture. NVIDIA's substantial profits stem from its position as a leading AI hardware and software supplier, resembling the successes of Gold Rush-era merchants selling mining equipment. Over the past half year, NVIDIA stock has surged by approximately 184%, elevating its value from around $146 per share to nearly $415 per share. Notably, the company's market capitalization has crossed the $1 trillion threshold. This impressive growth trajectory was marked by weeks of rapid expansion and a remarkable 24% price surge, equivalent to $240 billion, within a single day's trading on May 24th. The key driving factor behind this extraordinary performance lies in NVIDIA's increased chip sales, spurred by the growing AI industry. Hi! We hope that watching this video was interesting and that you learned something valuable. If you enjoyed it, please hit the notification button, like, subscribe, and watch more of our videos. Also, don't forget to share your comments in the comment section below. This is Finance Sense, helping you stay current on all the most recent changes in the financial markets and economy. Stay safe and look out for the next video.